We had tech stocks again leading the gains. We had also investor David Einhorn saying the tech stocks are in an enormous bubble. What are your views of what will be driving the markets in the next few weeks, of course, as we head towards the November elections?
Shery, thank you. We're seeing the market trying to digest a lot of conflicting signals out there. Obviously, a setback as we're starting to see COVID raise its head, going back into lockdowns. Lots of governors here trying to figure out what they're going to do, as well as states around the world, wondering if we need to start stepping back away from the get out and get back to normal. Some of the tech stocks that we were giving back are part of the stay-at-home basket of stocks that we've been looking at. We've seen a lot of support for that, but we've started to see a rotation into cyclicals, and that unfortunately just got interrupted by this bad news on the COVID front. And then finally, here in Washington, D.C., all eyes are on the race in the House, the Senate, and the presidency.
Talking about that rotation, this GTV chart on the Bloomberg showing how small caps may be having a comeback right now. This is a Russell 2000 set to outperform the S&P 500 as well. Where would you go in terms of sectors to see some growth potential as we head away perhaps from these large tech stocks?
Well, right now we're looking at mid caps. So you mentioned small caps showing some recovery. We really think that there is an opportunity for investors to take some advantage in the mid cap sector. We also are looking for that rotation, and there's some attractiveness in the value sector. The key question is whether those stocks will look more attractive next week. Our investors are really expecting to see heightened volatility, not just through the election 7 days from tonight, but on into the next several weeks. And so we're seeing them start to stay on the sidelines and really begin to build up their cash positions, hold on to those cash positions. We're seeing trading volumes drop ever so slightly as we head into the election, because I think there's still a lot of uncertainty.
Yeah, what's a sensible allocation to cash at the moment, and an extension of that, are you seeing much haven demand?
Paul, that's a fantastic question. The allocation to cash is something that is really very, very difficult because every investor has a different tolerance for risk. But we really are seeing those cash levels build up. I'm told that even our institutional trading desks are seeing institutional trades at 1 to 1.5 standard deviations below the normal exposure to the markets. So that cash is building up. And we're seeing a little bit of support here for treasuries. And looking abroad in the safe haven currencies, we're seeing some attractiveness, for example, in Chinese government bonds. A little difficult for U.S. investors to access, but we are seeing a lot of the trades going to these safe haven trades.
If you have an appetite for risk, do you see anything appealing in emerging markets, particularly in Asia? Because a lot of these countries now have COVID cases pretty reasonably under control.
You're absolutely right. And we're seeing a little bit of a risk on. And so as we look farther afield from a U.S. perspective, we're looking into the emerging markets, and we see some real opportunity in emerging market value stocks. Those have really not been recovered, or they're starting to show some recovery there. We think as trade picks back, that will be very, very helpful. Again, looking there, we like energy commodities. We see some potential there. And in the debt category, we actually like Asian high yield. And looking into China, we like Chinese property.